Good day to one and all. This is Dr. Sivaraman of iknowindices.com. After nearly a gap of holiday, I am back again to give the Asian session live market analysis webinars. So today, on 25th of July, I'm going to give you the forecast for the week 25th to 29th of July, the expected market moves, and that could happen during each sessions of the day. Besides, I also do the live market analysis using the initial lows and the highs and try to explain to you how exactly the players intend to make the moves in the market. Ultimately, we need to read the intentions of the players from time to time in order to understand why they are making such moves, because we know well that market is being manipulated. Because of that, such volatile moves are happening in the market, and also such knee-jerk reactions are done with the purpose of making a surprise to that of the traders and earn their money. So we need to find out in what way the players intend to make the moves in this week. Being the last week of the month, the market is known to be very volatile for the month-end time. And I'll explain to you with the details. So my contact details are email ID dr@i-knowindices.com, and in the event if you want to contact me through Skype chat, then the ID is iknowindices@hotmail.com. The website address is given here is iknowindices.com. Now let me go to the next slide. So we go to that of the derived forecast to start with. Then later on I'll explain to you the market reading and the live market analysis using the live market code page. And we follow the market using the GMT time frame, which is shown here. And if you've got any questions, you can ask me, and that will be displayed here for me to answer to those questions. Now this is the forecast sheet for this week, 25th to 29th of July. This is a month in time, the last week of the month. The players are known to make the monthly trend reversal move. So the monthly trend reversal will be volatile, and this time they are expected to make, after each volatile move, a sudden rise in the market in order to trap the traders. So they create the bearish field by making a quick drop, and once the traders think that the market is going to be bearish and take sell positions, the players are here going to gain quickly and trap such short sellers. And then also, when the market goes higher, the traders might think that the trending is going to happen, and they try to go in for a breakout trade buy after that of the rise, and then suddenly the players are expected to drop and trap them. So ultimately, understand the players' intentions are to be read from time to time. Besides following the forecast, session-wise forecast, what I have given it, then you'll be able to really find in 90% of the trades straight away the success. And in the event, if the market goes against the expectations, we have the trading strategy to limit the risk, using the hedge order to limit the risk and maximize the profit on either way trades. So thereby, we are in a position to do the fearless trades. So keep that in mind, and always keep the contingency plan ready so that you don't develop the surprise when the market makes unexpected move. So the expected moves in this particular week are: today, 25th of July, during the Japanese session, they are expected to slowly swing and firm up. And you come across all the currencies are positive net change. A time ago, about half an hour back, euro was in negative net change. Slowly, they are gaining the levels also in euro, and they are expected to make the rise during that of the European session, and then they are expected to make a small gain and then drop during that of the US session, and then firm up towards close. So don't be afraid of such drops, and the players are here to make such quick drop and quick rise moves during that of the month and time. And tomorrow they are expected to make the dip during start of the Japanese session and then firm up, then swing and slide during that of the European session, giving that impression that Europe is going to be in bad economic condition. And then later on they are expected to gain the levels in the case of Euro and GBP during the US session, telling that the US economy is not reviving. So here they will say European economy is not reviving, and during that of the US session they will say US economy is not reviving. So again they will start gaining the levels in the case of Euro and GBP. Then on 27th Wednesday midweek they are expected to make the dip during start of the Japanese session and start rising all through the sessions. Then on Thursday, as a penultimate day before the weekend, they are expected to make the swing and slide during that of the European session, Japanese session, and then followed by that they are expected to gain the levels during that of the European and US sessions. Then on Friday, they are expected to make considerable gain during the Japanese and the US session, with a moderate gain during that of the European session, and that will give that impression to the traders. Suddenly the market has reversed and become bullish. And again next week, then the players are expected to make the month beginning volatile moves as the month beginning trend reversal moves. And these, the trend reversal month beginning and the month end trend reversal moves are mainly to handle the derivative market. So they handle the options and the futures positions and also the forward cover positions of the exporters and the importers, and then try to trap them and earn money. Besides earning in that of the spot market, they also earn in that of the CFD, futures and options market, besides the currency conversion also from time to time. So keep in mind the players are here to trap everybody, and so only then they will be able to make huge profit for their investment. Ultimately, we need to understand that we can't compete with them or we can't fight against them, because they use the bank arms for their trades. So what best we can do is we read the intentions of the players and trade along with them, rather than trying to give our own interpretation following the technicals and fundamentals, because technicals and fundamentals will work very well if the market is not operated, if the market is not manipulated. As long as the market is manipulated, the technicals and fundamentals appear that they work in the market, and suddenly the players reverse it, and we can have an excuse that because of fundamentals the market has reversed. And when you follow the fundamentals and become bearish, then we may come across a sudden reversal in the market, and probably the attribute could be due to technical oversold condition the market has reversed. So invariably you come across the players make the market appear moving in tandem with that of the technicals and fundamentals, but they do not give the clue to that of the traders when the market is going to follow fundamentals and when other time the market is going to follow the technicals. So keep that in mind, that the players are here to trap the traders. So we have to be very cautious and trade optimistically, and also use all the risk limiting factors like hedging to limit the risk, so that we don't get ourselves exposed unnecessarily in the market and start crying. Now, here I have given the expected range in which the currencies are supposed to move in this particular week. You would have noticed during the month of July, the market was making only sideways move most of the time. And then we have come to the last week of the month of July. The players are expected to gain the levels here as a surprise. Now, euro could form the low 1.0950 and the high could be 1.1350 area. Then in the case of GBP, from 1.31, they went up to 1.33 and come down, went up to 1.33 and come down. This they do it as a lower level consolidation with frequent downward stopping, and they are accumulating here the buy positions. Afterwards, they are expected to make an upward spike, and then people will think that okay, we could have bought it around 1.31 in the case of GBP or 1.28 in the case of GBP when they have shown it last month during the British exit time. So ultimately, when you think that the fundamental is going to have a long-term trailing effect, the players will simply discount it and say that there are other events which are to be given importance in this world. So forget about those events which has become a past. So keep in mind that we normally tend to follow a fundamental and continue to explore, continue to find more possibilities based on that fundamental, and suddenly the players will give another fundamental a highlighted condition and then start talking about it. So keep in mind in the case of USD they have been talking about BOE intervention and gained. Again, they said that BOE come out and dropped USD and came down to 101 and then it started gaining the levels. So they are expected to gain the levels more in the case of USD then later on they are expected to gain the levels in the case of Euro and GBP. And you can see the contrarian move, they are making it in order to gain the levels in the case of the yen crosses and also the other crosses of the commodity pairs, etc. Then in the case of CHF, you'll come across sometime the strengthening of CHF when Euro is gaining, and then subsequently USD CHF is also expected to gain the level as a contrarian move, as you see that Euro is showing positive net change and USD CHF is also showing positive net change as a contrarian move. Similarly, Euro and USD yen are showing positive net change, or GBP and USD yen are showing positive net change in order to gain levels in the case of GBP yen. This is how they make the game by making contrarian moves in the market. Then in the case of Canadian dollar, it is expected to make a range bound swing from 1.29 to 1.31 area. After reaching this, they are expected to drop the level to 1.29 again when Euro and GBP are gaining, along with that of USD yen. So among the denominators, namely USD yen, USD CHF, and USD CAD, you will come across variations with regard to the market sentiment. So when USD yen is gaining the level, we should not simply think that USD CAD could also be gaining the level, but they may drop it. And similarly, USD yen, when it is gaining, if you think that USD CHF might also gain the level, they may simply drop it. So the denominator currencies, in order to bring in the volatility in such denominator crosses like CHF yen and CHF CAD, etc., they try to bring in variations by making contrarian move in one or two currencies. The other one, they make the opposite of the market sentiment. So as a result, you might come across variations in the moves. So follow each currency separately, and overall sentiment is okay to understand the market, but you have to see the individual, how exactly they are reacting to that of the event or market information, because we have to find out when they are making the contrarian move, when they are making the USD gaining or USD weakening move, in order to track the currency and take position so that you will be able to make positive profit in such trades. Then the case of Canadian dollar, as I explained, they are expected to make the range bound move. The Australian dollar is expected to slowly gain the levels from that of 0.7450 area to 0.7750 area. Slowly they are expected to gain the level. They gained and dropped it, made it appear as if it is range bound or wide range swings are seen, but they are expected to breach the earlier high they had done and make the shift in trading zone along with that of Euro and GBP. Now coming to that of the market reading, I noted down the initial lows and the highs around 3:30 GMT in all the four majors and two commodity pairs. Now we will compare the market levels with those noted down levels. In the case of Euro, 1.0953 is the low, which is unchanged, but the high is 1.0977. They just breached it by 1 pip, indicating that they wanted to slowly gain the level, and they are holding closer to the high. Then in the case of GBP, 3110 is the low and 3144 is the high. They are not breached the low or the high. But GBP is currently holding in the middle level. They are expected to make a small dip before making further rise. Then in the case of yen, 106.10 is the low, 106.72 is the high. They are not breached the low or the high. They are expected to breach it, the high, and take it higher during the course of the day. Then CHF, 98.44 is the low, 98.96 is the high. They are not breached the low or the high. Then Canadian dollar, 31.24 and 31.52, they are not breached. And Australian dollar, 74.57, 74.81, they are not breached it. So even though you come across subdued moves happening in the market, excepting Euro breaching the high, none of the other currencies have breached for the past from the top 3:30 GMT, which clearly indicate that they are just inducing the traders to commit positions, and afterwards probably technically the traders might think that euro does not seem to have strength, or GBP looks very weak, etc., or fundamentally it might be beaten down again. That sort of news they will try to spread it, and then later on, once the traders commit the positions, start gaining the levels. So the recommended trades for today, in the case of euro, can keep a buy limit order 1.0960 with 1.0920 as the hedge order, and you can book profit around 1.1020 when they are gaining the levels. So once the position is filled or the limit order is filled, it will become a position. Then try to remove the hedge, and once the position start making profit, try to remove the hedge order and keep stop at entry so that you will eliminate the risk. Then later on, you trail the stop in a profit making position and keep the exit order or the take profit order. And once the going is good and when they are gaining more level, you can move the take profit, the exit order on the higher side when the lower side trailing stop is working in a profit making position in order to book the profit in the event suddenly if the market reverses. That way, you will be able to really protect your profit and maximize the profit as the market moves to your advantage. So keep in mind that you have to carefully take a buy position near that of the low, and they are expected to make the gains. And also in the case of yen, around that of 106.10, you can take a buy. They might make a brief downward stop and then start gaining the level in order to give a trigger for euro and GBP to gain. And later on, they will gain the level also in the case of USD yen. Australian dollar is also on dip you can buy, and it is expected to gain more. As you know, the week beginning, the commodity pairs lead the rally and lag behind. So you can take advantage in commodity pairs also. Now these are all the market timings. Each day is divided into 3 sessions, namely Japanese, European, and US sessions. Depending upon whatever the name you want to give, you can give it. But the timings are very important. 0030 to 7 GMT is the session 1 or the Japanese session, and 7:30 to 13 GMT is session 2 or European session. 13:30 to 20:30 is session 3 or US session. And in between you come across 30 minutes gap time, and between the day you come across about 4 hours of gap time. During the gap time, they make the false move to hit the stops aggressively. And each session is subdivided into first 1.5 hours and last 1.5 hours as the early and the late session. The remaining time is called as a mid-session. And during the early and the late sessions, they handle the majors. During the mid-session, they handle the crosses. That is how they systematically handle the currencies. So again, in order to handle the cross, they make the contrarian move in the case of majors during the mid-session. So if you follow the majors carefully, you will be able to identify that what sort of move they could do in the case of cross and accordingly take positions rather than doing in-depth analysis of the technicals of those crosses. Many of the people are of the opinion that the majors might be influenced by that of the US economic data or European economic data, etc. And crosses are unaffected. But as you know, the players make big moves in the case of majors, and because of that, the crosses make the moves. So the influence will also be passed on there. So also you need to identify when they are making contrarian move and then try to take position. Say for example now, USDN and GB, USD, both are showing positive net change. Because of that, GBPN will be showing a positive net change. Look into that of GBPN. GBPN is showing 50 pips positive net change. It is around 139.49. So when they are making such positive move during the mid session, you can find out whether it is closer to that of the low or closer to that of the high. The low is 139.23, the high is 140.13. So you can just see that 139.58 or 50 level is not breached for more than 30 minutes during the Japanese session, mid-Japanese session. You can take a buy and later on keep 50 pips hedge order to limit the risk. And once they start gaining the level, keep stop at entry and remove the hedge order. Then you see that how exactly you can maximize the profit in such crosses by looking to the contrarian moves when the players are making, because such contrarian moves are made mainly in order to gain or lose level in the case of crosses. So at that time you will be able to really get that advantage. Whenever they are making contrarian move, look into that of the respective crosses. Whenever they are making the USD gaining or the USD weakening move, try to trade only in the case of majors so that you'll be able to really make profit. When they are showing the USD gaining or the USD weakening move, if you try to take position in the case of crosses, you may not come across big advantage. There might be a small swing and sideways move and you'll be simply wasting your time. So you have to find out when exactly you can trade in crosses and when you can trade in majors based on the timings of the market. So on Friday, I'll come and explain to you how exactly the market was expected to make move and what has happened. So actuals, we'll try to compare it with another forecast and find out based on our review how the forecast is dependable. Then on 28th, Thursday, I'll be giving the Forex market together part 1 and part 2 webinar explaining the trading strategy and also take live the positions and show you the results of such trades so that you will be able to really understand how the hedging can be effectively used in our trades. So I'll be doing it before you using the webinar tool so that you will be able to really understand how you have to perceive the market from time to time, because the perception of the market from time to time is vital for you to become a successful trader. If you simply believe others and not having your own understanding of the market, then you might come across many times you are trapped under some traps. But if you understand the behavior of the players, how exactly they are making moves in respective currencies, then you know, okay, this is what they are going to do it, and you'll be able to envisage and then try to trade at ease. Still, you will be using the contingency plan of hedging to limit the risk and maximize the profit. So always focus on the forecast, market reading, and the trading strategy in order to fine tune all your trades so that whether they rise the market or drop the market, you should be able to earn net profit at the end of the day. And that should be your objective. So rather than simply become victim of market sentiment, you should take advantage of such things and become a smart trader. If you got any question, kindly ask me, I'll answer. There is a question from Satish. There are huge swings and drop in GBBN. How to read this move? Sometimes it is confusing on the instrument. Okay, as far as the N crosses are concerned, and always in the crosses, the volatility will be very high. And also that happens because of the less volume condition. So when compared to that of the majors, the position taken by that of the traders in the crosses will be less. So that is why you come across the spread is also high. That is between the ask and the bid. You come across the spread might be about 3 to 5 pips. And sometimes when the market is making big moves, the spread will be much higher. And that is what you come across in the case of crosses because of lesser volume. See here, now in the case of GBBN, the spread is around 6 pips. 139.41 to 139.46 or now 3 pips. See, that is how they just make the moves in the market. So this you should be able to understand. Even though the market is not showing any trade, still if they drop the ask or rise the bid or drop the risk, and invariably your usable margin will swing. And also the platform providers, they have the variable spreads which is applied to your positions. So the variable spread is sometimes the spread will be about 2 pips, sometimes it might be about 7 pips or 10 pips, and during that of the data release, the spread might be about even 50 pips. So that is how they show the variation, and that will have a telling effect on your positions. And that is mainly done purposely in order to bring in margin call to your account, even if you don't have adequate usable margin in your account. So you have to be very careful when you are taking positions in the case of crosses, and always keep the hedge order to limit the risk. And that is a must in the case of crosses. But if you keep 30 pips hedge order, they might hedge you very quickly. So you may have to use 50 pips hedge order in the case of crosses. Besides, when they are close to that of the low, you might come across that they will just hover around and frequently cut the low by 1 pip, 2 pip, 1 pip, 2 pip, and not cut for 30 minutes, again cut by 1 pip, 2 pip like this. And that shows that they are doing the lower level consolidation, and finally they will make one extended stop and before making a rise. So if you want to be a smart trader, don't enter into the market when they are just consolidating. Whenever they make a quick drop, and stop cutting for 30 minutes. And that could be easily understood when you follow the respective majors. So now if you want to trade in the case of GBBN, you just see GBB, they come closer to low and not breach the low for 30 minutes. And yen, they come closer to low and not breach the low for 30 minutes. Then you find GBBN, they will come closer to low and not breach the low for 30 minutes. At that time, take a buy position there. Then they will start gaining the levels in the case of Euro. Gain the levels in the case of GBP as well as USD. Then you will find the gain will be very fast in the case of GBBN. At that time, keep stop at entry and remove the hedge order. First thing, once the position start making profit. And you know, in the case of crosses, the volume is less. So they will continue to make some moves which may not have any direct impact to that of the majors. So there is no need for a big move in the case of GBP for GBPN to make a big move. So they simply say that the move happened in the case of GBP yen because of that, which has influenced GBP and started gaining the level. So they give different attributes, but they know well when the traders have taken adequate sell positions in the case of GBP yen, thinking that it is not having strength to go high, then you will find one-sided rise they will make it by gaining the level in the case of USD as well as GBP. Even if suddenly the trade is turned long, they will simply drop USD when GBP is gaining. So what will happen? That will become the USD weakening move. Automatically, when the USD weakening move is shown both by GBP as well as USD GBP will make a drop. So always keep in mind that the players make moves purposely in order to make money, and they are not getting any reward by simply making an upward spike or a downward spike in the market. And they make all such moves only when the traders have committed positions, so that such spikes will be meaningful and that will earn money for them. So when you take positions, be careful and always keep the hedge order to limit the risk. Once the position makes profit, keep stop at entry, thereby you will be able to limit the risk and then wait to maximize the profit. But if you wait for a longer period without a trailing stop, then probably your greed will also affect you, and as a result, your position, which was making profit all along, will suddenly be stopped out at entry. But still, you will not incur any loss. So always keep in mind that stop at entry is a must once the position start making profit, and then subsequently, once they form the new high and the new high is not been breached for 30 minutes to 2 hours, book profit. And especially during the trend reversal week, you have to book profit in the currency. Any other question? So you have to do the swing trades rather than trying to do the position trade during the month end and the new month beginning time. There are any other question? I'll answer to those questions. Otherwise, I'll go back to the forecast sheet. The expected market moves are shown here for all the 5 days of the week, and the market is expected to be very volatile during the last week of this month and the first week of the new month. And they do such volatile moves in the market mainly in order to handle the derivative market. So keep that in mind and only do the swing trade, especially the session-wise swing trade. You can do it, or the intraday swing trade, that is take during the Japanese session drop and book profit during the US session rise. Don't carry forward the position to the next day. Probably if you just hold the buy position, the next day they may drop and your position might be in the loss. So avoid holding the position for a longer time, and you will be able to really build up your equity by doing swing trades. Then these are all the levels in which the currencies are expected to swing during this particular week. So this webinar is being recorded and it will be available in FX Street, and I'll come back on Thursday and give you the Tracking the Forex Market Together webinar for nearly 3 hours during part 1 and 1 hour during that of part 2, so that I'll focus more on the trading strategy. If you ask questions pertaining to that of the trading strategy, I'll be able to really explain to you how the hedging can be used effectively in order to make profit during either way moves of the market. Then you will be able to understand the advantage of using hedging. There will be a disadvantage if you use the hedge, that if the position is hedged, you have to carefully handle the positions. Otherwise, you might feel that you are struck with such positions. Higher level buy and lower level sell. But if you know And also you develop the mindset, okay, the buy position I'll try to close like a buyer in the market, and the sell position like a person who has taken the sell position in the market, I'll try to close it differently. Then you'll act like two traders, because in the market you come across both buyers as well as sellers at a given time. Then you have to carefully handle it by giving different perceptions for the two different positions. Then you will be able to really develop your own strategies to earn consistently irrespective of the market moves. So wish you all happy trading in this week, and I'll come back on Thursday to give the tracking the forex market to the paper, and on Friday I'll review the forecast what I have given it. See you all. I take this opportunity to thank FX Trade for the facilities provided to present the webinar. Thank you one and all the best.